EV stocks have been doing pretty well in 2021. They've been bouncing back a lot after seeing a massive dip in the first half of the year. Now we're starting to see them recover. Tesla's doing well, NIO's doing well, all across the board. All EVs had pretty good Q2 numbers. NIO especially had over 8,000 delivery numbers, a record-breaking quarter for them. Tesla had close to 200,000 deliveries for them. But now, the thing to keep in mind is there's a lot going on with the EV market, especially in the US, that can't really be controlled because of things coming out with the government. That could put Tesla at a disadvantage and could put NIO at an advantage. So in today's video, we're gonna talk about exactly what's going on there, a couple of policies that have been put in place that have made the US really start lagging compared to other countries that have been ramping up how much they're spending and really growing the EV space in their country. So in today's video, we're gonna break all that down. If you enjoy this sort of content on EVs, you're invested in NIO or Tesla, well then please be sure to like the video down below, subscribe, and if you don't already have the public.com investing app, make sure to go ahead and follow me on that. You can buy stocks, sell stocks, and see exactly what I'm buying and selling in real time, as well as a full portfolio breakdown. Think of it like an investing app combined with social media. It is completely free to follow me. Use the code Michael when you sign up, and you'll get up to $50 in a free stock. But anyways, so Q2 of 2021 was filled with a lot of record-breaking numbers for the EV industry. We saw NIO have its best month ever in June of 2021 with over 8,000 vehicles delivered. We saw Tesla have a massive quarter as well, where they delivered over 200,000 vehicles in a quarter for the first time ever. We saw GM and Ford have increased numbers of electric vehicle sales. Ford, for example, saw an increase of their Mustang Mach-E SUV sales, and they're already starting to work on their electric F-150, and GM as well also saw a massive increase in their Bolt EV sales, up 351% year over year. So on the surface, everything looks pretty good in the EV space, but the problem is right now there are a couple things going on behind the scenes with regulation, specifically in the US, that could have a couple of negative impacts on the market and specifically on US EV makers. So the first thing I want to go over is what is going on with Joe Biden and a couple of policies that have been put in place that have caused the US to fall behind China, Europe, and other countries around the world. So first of all, according to data from the International Council on Clean Transportation, the US is falling behind China and Europe in terms of electric vehicle production and sales. What we saw is that from 2010 to 2020, they tracked how many vehicles were sold in the US, EVs, how many were produced in the US, and so forth, regular cars. It's just standard data that they were tracking. And essentially what they found is that, according to the International Council on Clean Transportation, they said that the gap between the US and other countries has started to widen. The US is starting to fall behind even more. So at the end of 2017, automakers in the US had churned out over 20% of the global EV cars. They produced 20%. But by the time it came to 2020, so just 3 years later, they only had 18% of the cumulative number of EVs sold. So they're dropping significantly, dropping 2% over the span of 3 years. It doesn't seem like a lot, but in an industry that's growing very rapidly, we want to see that the US is leading the way, especially since Tesla's a US-based company. Everyone thinks of EV, it's synonymous with Tesla. You would think that the US would be leading this and that we would actually be ramping up production, because the thing about it, 2017, Tesla barely sold any vehicles. This year, they're on track to sell close to 1 million. They did about 500,000 in the first half of the year. So you would think that in 2020, they were doing more, especially with how much Tesla has grown. But that's not the case. And it's for a very specific reason. So according to the study, it explains how right now, government policies are what is making the difference. It's not about Tesla versus, let's say, NIO. It's not about that. It's not about Tesla versus XPeng or BYD. It's not about that. The important thing that this report says is that electric vehicle manufacturing growth happens when there are strong national policies designed to spur the market forward. And the thing about that is that in the US, there has been a lot of different policies suggested that would have spent hundreds of billions of dollars for EVs, but they've cut them down. For example, the infrastructure deal that was just recently talked about was supposed to have $174 billion to boost the electric vehicle market for charging stations for EVs, but no, that was basically, modified to go from $174 billion all the way down to $15 billion. So that is a bit of a concern. When you were expecting to see $174 billion spent on EVs, help growing in the US, help manufacturers, help all these new cars, like new companies, let's say like Lucid Motors and all the other ones like Fisker and Tesla, you would think that they would see a lot of money flow in. It would help all these companies build out more factories, give them tax incentives to do so. It would help GM and Ford transition over to EVs. But no, that's not the case. They decide to make it just $15 billion instead, which really is not going to be good long term, because we're already seeing that the US is seeing a decrease in the total percentage of the US EV production. In terms of the total world EV production, the US is falling behind. From 2017, they were at 20%, and now they're at 18%. And with this policy in place, and with this new infrastructure bill, they could fall behind even more, because they were expecting to have hundreds of billions of dollars for EVs, promoting that industry. Now it's only $15 billion. In addition to this, what we're seeing across the world is that China was the largest EV producer geographically and accounted for about 44% of electric vehicles manufactured, about 4.6 million units in both production and sales. Europe was about 25%, and they manufactured 2.3 and sold 3.2 million. So when we're starting to look at these numbers, the thing that's important is not about just the policies, not about Tesla versus NIO or Tesla versus XPeng or Lucid Motors. That's not what's important. Like, the policies definitely have a big impact, but the thing that's really going to hurt the US moving forward is that manufacturers and automakers are going to start moving overseas, building factories. We're already seeing this with Tesla, because if there's more demand overseas and more consumers overseas in Europe and in China are buying electric vehicles, well, where does it make the most sense for them to produce them? It makes the most sense for them to produce these vehicles in those countries, because of, taxes, and importing vehicles to another country gets to be expensive. All the parts, doesn't make sense. You produce them where you sell them. That's the easiest thing for for electric vehicles, for vehicles in general. So that's what we're seeing now, is that all of these new factories, facilities, production plants are being built overseas in China and in Europe, because that's where the demand is for electric vehicles. 10% of new vehicle sales in Europe were electric vehicles. 6% of all vehicles sold in China were electric vehicles. But in the US, only 2.3% of vehicles sold were electric vehicles. That's concerning, because that shows us that people in the US, even though everyone's talking about EVs and it's so exciting, the numbers don't lie. The numbers are showing us that ultimately people are not buying EVs as much as we would have originally expected. Like, when I saw that number 2.3%, I would think it's a lot more. Probably because, though, Tesla is the main EV company. When anyone thinks of EVs, they think of Tesla. So we're going to need to see Ford and GM ramp up their production. We see that GM is in talks of building a couple new manufacturing plants, which will be good specifically for EVs. But the problem is not enough facilities in the US, not enough factories that make cars are dedicated solely to EVs. And that's making it so other companies don't want to invest in the US to build out electric vehicle facilities, because they might as well go overseas where there's more demand. Right now, only 2 of the 44 vehicle assembly plants in the US, 2 out of 44, were dedicated to making electric vehicles. And it's expected to be 7 out of 44 by 2025, but still. Other countries like China, their goal is to have 25% of all vehicles sold be electric by 2025. So if the US only has 7 facilities out of 44, we're falling behind. So I'm not saying it's bad for Tesla or bad for NIO. It's just the US EV market is going to be hurt long term if there's not more money coming in. If companies don't want to invest here because there's not as much demand, well, it's going to hurt the US long term for the EV market. Because right now, if you're a company, you're going to look where there's the most demand. The most demand is in Europe and in China. China sells more vehicles every single year than any country in the entire world. Over 20 million new vehicles were sold in 2020. Expected to be more in 2021. The US doesn't sell anywhere close to that. It's a lot of the fact because China has a huge population, 1.3, almost 1.4 billion people. The US's population is only 350 or so million. So the China has a population 4 times the size of the US, but just something we need to keep an eye out on, because policies from the government combined with its lower demand in the US is all hurting the EV market in the United States. Not as much money is coming from the government, not as much demand from consumers. So that's going to push companies elsewhere. It doesn't really hurt Tesla because Tesla is already building manufacturing facilities in China. They've been in talks to build more plants potentially in India. They have plants in gigafactories in Europe. So Tesla's fine. They have factories and facilities all over the world, and they're building these out consistently and like very rapidly. So it's not a big issue for Tesla, but it could hurt the overall EV market in the US long term. But let me know what you guys think. I don't think this is going to have a negative impact on Tesla. It could be harder for them to just get into some countries. There may be some tax incentives if people, let's say in China, buy Chinese electric vehicles, and the government in China could always kick out Tesla. Like they could say whatever they want in the media to portray Tesla a certain way, hurt Tesla, make it harder for them, put more taxes on them. They can do whatever they want. So it would be best if the US market was very strong, growing very rapidly, growing faster than in China or in Europe, but it's not. So we'll see what happens. But let me know what you guys think of this. I just thought it was really interesting to see because everyone always associates EV with Tesla, but the US is falling behind. It's not that Tesla's falling behind. Tesla's growing very rapidly. They had their best month ever, best quarter ever, over 200,000 vehicles. But the thing is when you're selling in other countries, especially in China, you never know what could happen with the Chinese government. That could potentially hurt your company. So it's nice to have, to fall back always on the US market, but we'll see what happens. Let me know what you guys think. Hope you enjoyed today's video, and I'll see you in the next episode. See you guys.